lecture today with Miss Ashwarya Sharma. As for the topic today is bank and financial institution. And for today's session is being streamed on the University STEKOM YouTube channel. And now I will lead our agenda this afternoon. First, we will start past presentation delivered by Miss Sharma. And for in the session, we have time for the center of missing.
Good morning, everyone. Can I start, Novita?
Yes.
Yeah. Hi, everyone. Good morning. I am Ashwarya Sharma, working as assistant professor at Chandigarh Group of Colleges Jhanjeri, and my specialization area is banking and financial. So today I would like to start my topic, banks and the financial institutions. So thank you everyone for giving me this opportunity to present my topic in front of you all, so that I hope I would be able to put some value addition to your knowledge, as well as telling you about the banks and the financial institutions working around in the country as well as around the world. So so today my topic is banks and the financial institutions. So today in this presentation, I would like to cover the following topic. First, we will be introducing the topic, what is the financial institutions, what is all about this particular topic. And then we will be covering the financial systems and types, functions, and what is the international level of these banks and the financial institutions, and what role they are playing at the country level. So I would like to start my presentation with this particular diagram. See, as you can see, I would like to try to tell you about the banks that is already you come across in your day-to-day life in the Indonesia, like Bank of Papua, Bank of BPD Bali, like that. These are the type of the banks and the financial institutions serving your country, right? So I would like to start. What is this financial things? What is this financial institutions, banks? What it is actually? So finance, as you all know that financial institutions comprises of finance things, right? So as you all know that finance is the backbone of any country, so financial so flow of financial should be in a symmetric way. So as you can see in the slide, the financial system prevailing in any country play an important role in the rapid economic development of a country, right? The economic history of all developed countries is totally based on the fact that the journey from underdeveloped country to a developed country and from developing country to developed country, it is only possible through a strong financial system. In a financial system of any developed country, which includes its bank, stock market, insurance sector, pension funds, and a government-run central banks with the authority. So they play important role for any country to shift from underdeveloped country to a developed country. These sectors influence a nation's currency and the interest rates. In developed country, they work together to promote growth and avoid runaway price inflation. When a country is still in a developing stage, the lack of a strong, sound financial system generally work against the nation economy. So for us, it is very important to understand the concept of financial institutions, financial system, so that we can understand it in a better way. So in any functional economy, economic resources, as you all know, that are limited. with the individual having unlimited wants and desire. This problem referred to as a scarcity and is one of the significant driver of any economy. However, it is a challenge as an economy in determining when, where, to whom to distribute its resources. Consequently, it results in a financial system structure capable of efficiently allocating the economic resource to stimulate the growth. So basically, the banks and the financial institutions are the component of a financial system. From the previous slides, you can come across the importance and the role of financial system plays for any economy to develop, to distribute its resources to the concerned countries, right? So for any finance student, for any economy, it is very important to understand the role of the financial system and these financial institutions. So, a financial system is a system that allows the exchange of funds between the financial market participants, such as lender, investors, and the borrower. And with this, financial system operate at national as well as in a global levels. A strong financial system helps or bridges the gap between those who have the funds and those who need the funds, right? So here with the diagram, now you can see financial system. Financial system is comprises of four major components. That is financial institutions, financial markets, financial services, and the financial institutions. Now, we can see here elaborative components of the Indian financial system. Being a finance student or being a finance faculty, we are teaching these components to each and everyone. And these elements are common in all the countries at also at world level. So the component of Indian financial system I'll be discussing. So it is same as in the everywhere following. So first component is in a financial institution, which is further classified into banking institutions and non-banking institutions. Financial market, it has the further components as a money market, capital market, and then we have the financial instruments to which is basically acting as intermediaries where the assets, and then comes the financial services. We have two types of financial services, which is asset-backed services and fee-based services, right? So in this particular lecture, we will be discussing one important component of our Indian financial system, that is financial institutions, which is comprises of banking institutions and non-banking institutions. So in the further slides, we will be consecutively discussing about the components of financial system and the financial institutions. Before proceeding further, first let's discuss the definition of the financial system. Basically, according to Christie, the objective of a financial system is to supply funds to the various sectors and the activities of the economy in a way that promotes the fullest possible utilization of resources without the destabilizing the consequences of price level changes or unnecessary interference with the individual desires. There's another definition by Robinson. He says that the primary function of the financial system is to provide link between the saving and the investment for the creation of new wealth and to promote a portfolio adjustment in the composition of the existing wealth. So a financial system or a financial sector functions as an intermediary and the facilitate the flow of funds from the area of surplus of the from the areas of surplus of the deficit. So basically that I have already told you that it bridges a gap between those who have the fund and those who need the fund. So financial system or financial institutions are acting as an intermediate between them. It is a composition of various institutions, market regulations, law practices, money managers, analyst transactions, and claim and liabilities. So this is our financial system. So what is the benefits? Providing a way for making payments, giving participant a way of earning interest in the form of time value, protecting them against a financial risk through the insurance sector, collecting and distributing financial information through credit agencies, governing regulations to maintain stability through its central banks and the governments, maintaining liquidity and converting investment into cash through its bank and the financial institutions. Now, we will be discussing what is financial institution. Financial institution, as I told you, it is one of the important component of any country's financial system. Financial institution is an institution or organizations that provide financial services for its clients, member, and society. Probably the most important function services provided by financial services provided by financial institution is acting as a financial intermediaries. Most financial institutions are regulated by the government, and these financial institutions includes banks, credit unions, asset management firms, stock brokerage firms, like that. These institutions are responsible for distributing financial resources in a planned way to the potential users. So for us, it is very important to understand financial institutions. So financial institutions, as you can see in this diagram, offers a wide range of financial services to the individuals and the businesses in the depositing, saving, investing, and managing the money, right? Or we can say these functions, financial institutions perform the functions in the following ways. They accept the deposits, they're providing agriculture loans, providing the commercial loans, providing real estate loans, providing a mortgage loan, issuing share certificates. These are the some functions that financial institutions play. Now, we will be discussing what are the types of financial institutions who are providing these functions of intermediaries, providing various type of financial services to their customers. Customers could be government, to the businesses, to an individual, right? So financial institutions are of various type. First is central bank, non-banking financial institutions, investment entities, insurance companies, thrift institutions, credit unions, commercial banks. These are the some types of financial institutions that we have in a country. So first we will be discussing the central banks. Every country has its own central bank, whether it is USA, whether it is China, whether it is India. So every country has its own central bank. Now, I hope you all are well clear with the meaning. These are the financial entity that monitors and oversees the procedure of other financial and the banking institutions in the nation. They do not deal directly with the individual customers, rather they deals with the retail banks, right? So we can, in short, we can say these are the banks for the banks. Every economy has a separate central bank and is named it differently. And central bank regarded as an apex financial institution in the banking system. It is considered as integral part of the economy and the financial system of a nation. The central bank function as an independent authority and responsible for controlling, regulating, and stabilizing the monetary and the banking structure of any country. So here are the some example of the central banks across the world. First is the Federal Reserve. is the Central Bank of USA. Reserve Bank of India is the Central Bank of India. People's Bank of China is a central bank for China. Bank of England for UK. European Central Bank for European Union countries. I hope you all already know the Central Bank of Indonesia. So Bank of Indonesia is the central bank which is prevailing in your Indonesia country. Now comes what is the function that a central banks perform? It is a monetary policy. It sets the monetary policy of a country. Monetary policy is a policy which regulates the supply of money in an economy. Through monetary policies, central banks regulates its credit. It is lender of the last resort to the government, lender of the last resort to the commercial banks. It ensures the stability of the banking systems by controlling the interest rates. They are issue money. The central banks perform the sole function is that important function is that they issue the money in the economy. They control the issue of the notes, currency in the economy. So here we can discuss some important functions that central bank performs. That it is an issue bank that I was discussing. The central bank is the sole authority that has been given the sole right to issue money in the economy, and they are responsible for rightful printing, minting, and circulation of money into the economy. However, with the great power comes with the great responsibility. Therefore, the central bank is responsible for controlling its elasticity, ensuring uniformity, and providing supervision to the other financial institutions in a country. Then it is a holder of a cash reserve. All the banks in a country are being guided to hold some cash reserve with the central bank. One of the most crucial function of a central bank is that they are a custodian of the cash. Moreover, every bank in a country keeps some reserve in some percentage of their deposit with a central bank. This makes central bank the legal and the most safest holder of the cash reserve. Central bank is the lender of the last resort. When everything with the bank function seems to be going down and any underperforming, then the central bank come as a rescue for them. So in other words, we can say that when the commercial banks are unable to lift themselves from the crisis, they take to the last resort, that is central bank. Then central bank help them in that crisis. So it is a lender of the last resort to all the banks and the government. Another important function that central banks performs is the ensure stability of the financial system. And financial system is being stabilized with the regulating banks lending policies and the financial derivatives. So with this, these financial institutions playing a major role as regulating, supervising, guiding the other institutions, those who are playing with the finance of the people of a country, right? Then comes another function of the central banks. They perform the function of the credit control. With the monetary policy of central bank, they control the credits in the economy. The commercial banks create a lot of credit during their course of operations. However, this credit can be one of the most critical and lending reason for the emergence of inflation in economy. In such case, governing body is required to monitor these credit rates. Therefore, the central banks work on the control and modification of these credit rates and control the inflation. As I hope this is clear with you all. If you have any query, you can post it in the chat box, and I would like to answer your queries as well. Okay, next financial institution is the banks. Banks comes with commercial banks. Commercial banks are the financial institutions that are primarily engaged in accepting deposit from the individual and the businesses and providing loans and the credit facilities to its borrower. So commercial banks are the non-profit. These work for the profit earning, and they operate with the primary objective of generating profit for their shareholders. Commercial banks are also known as the retail banks or universal banks, as they provide a wide range of service to its retail customers, including payment services, investment services, foreign exchange services. In addition to their core function of deposit taking and lending, they are providing various different types of functions. Commercial banks are regulated by the central bank of any country and are subject to various regulatory and supervisory requirements to ensure the safety and soundness of the banking system. So, another financial institution that we are discussing is the commercial banks. Commercial banks, as I already told you, is the financial institutions which is engaged in the function of accepting the deposit and providing the loans and services. But now they are already also performing various other functions to its customers, to its businesses. To these functions are, they are accepting the deposit, providing loans and advances. They are working as a financial intermediaries, and they are promoting the digital economy. With this diagram, the functions of a bank will be more clear to you. Banks perform first function, primary function and secondary function. The primary function of any banks is the acceptance of deposit and granting the loans and advances to its customer. Apart from that, they are also providing some agency functions and utility functions. Agency functions are where they are acting as a agent uh, for their customers, right? Where they are transferring the funds to its customer, periodic payments, controlling the payment of checks. They are collecting the checks on the behalf of their customer, portfolio management, right? And they are doing the periodic collections on the behalf of their customers. So these are the agency functions of the banks. Apart from that, they are also providing some various other utility functions as per the usage of a customer, like locker facility they are providing to the customers. They are giving the advisory function to its customers. They are providing social welfare programs to its customers for the upliftment of the society. So these are the some functions that commercial banks are playing in an economy. And with this, they are very well working working as a financial institutions. Now, what are the types of banks that are prevailing in a country? Public sector banks, private sector banks, foreign banks, regional rural banks, cooperative banks, right? Public sector banks are those banks which are owned and controlled by the government, and they provide banking service to the public. So in India, we have State Bank of India, Punjab National Bank, Bank of Baroda, some examples of the commercial banks. Similarly, maybe you have in your country uh, some banks which are come under the category of the public sector bank. Those banks which are owned and controlled by the government. Then comes private sector banks. Private sector banks are owned and controlled by the private entities, and they provide banking service to the public. So HDFC Bank, ICICI Bank, Axis Bank is those banks in India which is come under the category of private sector banks. Then comes foreign banks. These banks are the headquarters in a foreign countries and have their branches or subsidiaries in the other country. These banks are called as a foreign banks. So Citibank, Standard Chartered Bank, HSBC Bank, these are some example of foreign banks prevailing in a country. So basically foreign banks have their headquarters in a foreign country have their branches or subsidiary in the other country, right? Then comes regional rural banks. These banks are set up with the objective of providing banking service to the rural people. They are sponsored by the public sector banks. So basically, these regional rural banks working for the upliftment of the rural sector of any country, they are sponsored with the by the public sector bank, private sector banks, and also with the government. Then comes cooperative banks. Cooperative banks are owned and controlled by members who use the banking services provided by the banks. So we have some urban cooperative banks, rural cooperative banks in our country. So I hope the meaning, the different types of banks is clear to you. And uh, with respect to other countries, some countries have further classifications of these commercial banks, like Islamic Bank. They have a different name of regional rural bank as a regional banks of a country. So according to the need of a country, there are different types of banks exist in a country which regulate the financial system of a country. Now, the another type of financial institutions from where we can avail the various financial services is the non-banking financial institutions. So far, we have just discussed about the banking institutions which are also accepting the deposit and giving you loans and advances services, agency services, utility services, collecting check on your behalf, doing payment on your behalf from your bank accounts, like that. Now we are discussing another type of financial institutions, that is non-banking institutions. Non-banking financial institutions are also the legal financial institutions. These are the entities that neither acquired a valid banking license nor do they allow customer to deposit amount. However, these entities offer alternative financial facility to its customer, including investment consultations, brokerage, transmissions, and risk pooling services. Rather than accepting the deposits, these are providing the other types of financial services to its customer. You can also see in these slides, the firms are engaged in the activities obtaining loans and credit facilities, buying bonds, stocks, and shares, leasing property, financial assets, financing assets, providing insurance, exchange currencies, operating hedge funds, engage in a chit transaction, etc. So these are the non-banking financial institutions. They are providing services, financial services other than acceptance of deposit from the customers. Now, there are different types of non-banking financial institutions that we are going to discuss. Before proceeding further, I would like to ask if you have any queries so far about banking institutions. All right. Then comes types of non-banking financial institutions. I hope my PPT is visible to you all. Fine. Now, non-banking financial institutions. There are different types of non-banking financial institutions providing different type of financial services to its customer. Under this category, we have mutual funds. Non-banking financial institutions are into the issuing of mutual funds, right? Then they are into the functions of insurance companies, the insurance companies, mutual funds companies, venture capital firms, merchant banks, finance companies, they all come under the category of non-banking financial institution. They are providing one or another type of the financial services to its customer. right? So mutual funds, what is that? It is a mediator between people and the stock exchange. Money collect from the people by selling their units is called as a corpus. Oldest mutual fund company we have in our India is UTI, Unit Trust of India. Mutual funds are nearly provide all the considerations. Then we have insurance companies. Insurance companies basically doing the functions of risk pooling and providing the risk coverage to its customer. They collect money from the public through the sale of insurance policies. We have different types of insurance policies or insurance companies in our country, uh, in the domain of life insurance, general insurance, motor insurance, health insurance, car insurance, house insurance, property insurance, like that. So this is also a kind of financial services that these financial institutions provides. Then we have the venture capital firms. They provide finance and technical assistance to the firms which undertake a business project on a innovative ventures. They provide finance for the commercial applications of a new technology. If anyone needs finances for the starting up of a new business, these venture capital firm provide you the loans and advances for the same. Then we have investment banks. These merchant banks provide financial consultancy services. They provide firm on a fundraising, managing IPO of the firms, underwriting new issues, facilitating demat trading. These are some kind of functions that investment banks provides to its customers. Then we have the loan companies. These loan companies are the financial institutions raises fund from the public for the lending purposes, right? So these are the some financial non-banking financial institutions providing the financial services to its customers, right? And these institutions are all are same in a different countries, right? In addition to that, we have microfinance institutions. Rather than granting a huge amount of fund, these are the institutions providing funds to the weaker section of the societies, right? And then comes vulture funds. Vulture funds buy stocks of the company which are nearly bankrupt at a very low price. After purchasing such stocks, they initiate the recovery process to increase the price of the shares and sell it at a later point of the time. So they vulture funds services are being provided by NBFCs. So help in the companies who become the bankrupt and providing the finance to them by taking their stocks, by buying their stocks at very low price and selling it in the market. Uh, Also, we have some Islamic banks. These banks provide loan on the basis of Islamic laws called Sharia. In the law of Sharia, interest rate cannot be charged on the loan. So this is another type of facility that cater a different need of a different type of customers, right? Then for providing these financial services, we also have different types of credit unions, right? These institutions offer traditional banking services, but not publicly traded entities. They are established and operated by the members. The ultimate shareholders are the members of these credit unions. These associations use and reinvest the money received as an interest to keep the cost low. As a result, they become the better choice for the member to fulfill their financial needs. These entities enjoy tax exempt status as a non-for-profit organizations. So, credit union are for non-for-profit organizations. They benefit their members only, and they have their branches in few cities or countries in a in a country. They have very few approach. It is totally based on it is just like a cooperative banks structure that is prevailing in any of the country, right? I hope the other the types of financial institutions are clear to you. Now we have different types of financial institutions that comes under the category of investment entities. Investment entities are basically the investment banks and the brokerage firms which falls under this category. The investment firms help the corporations, government, and other entity to build capital, raise funds, gain financial advisors. These entities as these entities work on a brokerage system. They let the customer acquire finance by investing in the security like stock, mutual funds, bonds, ETFs. In addition to it, it acts as a guide to startup or companies in conducting complex transactional process. These investment entities, these investment bank offer advices for initiating fruitful merger and acquisition. So in crux, we can say that investment bank company assist in raising the capital. They provide underwriting services for securities and facilitating mergers. And also their role is very important in the financial market and the corporate finance. Then we have thrift institutions. Institutions are also a type of financial institutions um, that are prevailing in a country. They are also referred to as a saving and loan associations. Thrift institutions are also known as saving and loan institutions. These entities allow up to 20% of total lending to the customer who are also their owners. They help the individuals enjoy opening account and acquiring personal loan and home mortgage. These are basically saving and small loan associations primarily focusing on accepting saving deposits. They provide home loans and other type of mortgage. They play a vital role in housing finance and community developments. These are also, along with the banking institutions, these are some other types of institutions that prevail in a country for as a financial institutions providing financial services, loan services to its customer of different category. Insurance company as well, very well clear to you all. These are the financial institutions allow individuals and business have policies against they issues policies against a monthly premium, and they cover the risk that an individual wants to mitigate, right? These schemes offer coverage or protection to asset against any financial risk they remain exposed to. For example, life insurance, car insurance, health insurance, house insurance. These are the types of insurance that insurance companies provide. Now we had discussed a lot about the financial institutions. Now we will discuss what are the functions that all these financial institutions perform, like banking institutions, non-banking institutions, commercial bank, and thrift institutions, insurance company. What all these institutions do through the financial institutions, basically the aim is to ensure healthy economy. There are minor and major roles they play to ensure they achieve their final goal. The primary function of these financial institutions is to regulate the money supply. With a regular flow of money, the financial entities keep the financial ecosystem active. The money supply process must be efficient given the wide use of money in carrying out the transaction. So these institutions basically very much helpful in providing a healthy economy, healthy financial system, smooth flow of money in an economy, right? So they are providing you the functions of banking services, investment advice, capital formations, catalyst economy growth of any country with the flow of fund in economy from those who have it to those who need it, easy fund transfer with the various kind of institutions. They manages the risk, financial risk, which to which any country people are exposed to. They regulate the money supply in an economy through its central bank. So these are the some functions that financial institutions play. They mobilize the saving for investment. They are driving economic growth. They provide liquidity, ensure monetary circulation efficiently. Their credit creation functions support business expansion and the customer spending. I have the example of financial institutions may role play in an economy. Uh, Example is a financial crisis in 2008. The administrative authority held many uh, uh, they help in the financial institutions from getting bankrupt. These entities include the American International Group, Bank of America, Citigroup. Okay, the importance of these financial institutions can be observed from the way of government interference as and when the entities in their respective nations suffer any of the losses. Right now, so far we have discussed financial institutions, financial systems that prevailing in any country. Now we are studying international financial institutions. International financial institutions are the organizations established to provide financial and technical assistance to countries and the region around the world. They play a crucial role in promoting economic development, stability, poverty reduction on a global scale. Now, international financial institutions, they are working at a global level for economic development, stability of a country, poverty reduction, right? Also, these international financial institutions are typically composed of the member countries and operate under specific charter or a agreement. So there are different types of international financial institutions. First is IMF, International Monetary Fund institutions, then is World Bank, then BRICS Bank, then Asian Development Bank, then Asian Infrastructure Investment Bank, AIIB. Right? All these international financial institutions have their member countries, and these member countries help their member countries to elevate poverty or help them any kind of crisis. Also, the upliftment of the economy of that country. Also, they are helping the underdeveloped country to grow. Right? We also have first international financial institution is IMF. We are already well versed with it. International Monetary Fund is a global financial institution. It established in 1944 to promote the international economic stability and growth. It provides financial assistance, policy advice, and technical support to its member countries facing any economic challenges. The IMF monitors global economic trends, offers loans to the countries with the balance of payment issues, and helps implementing the economic reforms. It has its headquarters in Washington, D.C., USA. The organization play a key role in preventing financial crisis and supporting economic recovery worldwide. Right? So IMF is one of the biggest financial institution. Right? Then comes the World Bank. The World Bank is another international financial institutions that provide funding, policy advice, and technical assistance to developing countries to reduce poverty and support economic development. Also, World Bank established in 1944, and it also has a headquarter in Washington, D.C. Uh, World Bank has its further institutions which is working under the World Bank, that is International Bank for Reconstruction and Development, IBRD. These institutions providing loan and financial assistance to middle income and credit worthy low income countries. So World Bank is basically working for the upliftment of the poverty of the underdeveloped countries through International Bank for Reconstruction and Development. Then World Bank has another institution which is working for the economic development, International Development Association, IDA. It offer interest-free loans and grant to the world's poorest country, right? So the World Bank funds projects in education, healthcare, infrastructure, agriculture, and more to promote long-term economic growth and development. It worked closely with the government and other global organizations to achieve its mission of ending extreme poverty and boosting share prosperity. So for the flow of fund, for requirement of the funds, right, we have international financial institution, World Bank. Another financial institutions that works at a international level is BRICS. BRICS is an economy for a group of 5 major emerging economies, that is Brazil, Russia, India, China, South Africa. These countries are also known for their significant influence on the regional and global affair, both economically and politically. BRICS was originally known as BRIC before the South Africa joined in 2010. So key features of this BRICS countries are economic power. Together, these countries represent a large portion of the world's population and GDP. They are the key player in a global trade and economic growth. The BRIC nations hold annual summits to discuss issues like economic cooperation, development, and global governance. Then development focus. The focus of these 5 major countries is to development of their member countries. The group of then BRIC countries are also significant player in geopolitical and often working together to balance the influence of Western power in the international affair. Though each country which is comprised in the BRICS has a unique political system and development challenge, BRIC countries share a common goal of fostering greater economic development influence for the global south. So BRICS is another financial institution that is working for the upliftment of its member country. Then comes Asian Development Bank. ADB Bank is a regional financial institution that established in 1966 to promote economic growth and development in Asian. Sorry for the interruption. ADB, the Asian Development Bank, is a regional financial institution established in 1966 to promote economic growth and development in Asia and the Pacific. Its headquartered in Mandaluyong, Philippines, and has a 68 member country, including both regional and non-regional members. They are also performing the function of financial assistance, providing loan, grants, and technical assistance to the member country for the development of project, infrastructure, education, healthcare, and environment sustainability, poverty reduction by supporting inclusive and sustainable economic growth, and it encourage economic regional cooperations among Asian countries to enhance the trade and investments. And then sustainable development, support projects that promote clean climate change mitigation and sustainable urban development. So Asian Development Bank, ADB, primarily focuses on developing economies in Asia, helping them to achieve long-term economic stability and social privileges. Then we have Asian Infrastructure Investment Bank, AIIB, is a multilateral development bank founded in 2015 to finance infrastructure projects across Asian and beyond. Its headquarters is based in China, and it has 109 member countries worldwide. Its key feature is infrastructure focus. The funds projects in transportation, energy, water supply, and and urban development to improve connectivity and economic growth. Sustainable development emphasizes environment friendly and social inclusive infrastructure projects. It is member driven. While China is the largest shareholder, AIIB operates as a cooperative institution with the decision making shared among its member, uh, alternative to Western institution. It is a complementary or alternative to the traditional lenders like World Bank, ADB Bank. These are also offering an Asia-centered approach to the development of finance. So AIIB aims to support economic development, regional integration, particularly emerging economy by filling the gap in the infrastructure investments, right? So we have discussed about the international financial institutions, IMF, World Bank, BRICS Bank, Asian Development Bank, Asian Infrastructure Investment Banks. These banks or these institutions are providing various types of financial needs to its member countries, right? In elevation of poverty, providing financial assistance, development projects, right? Now becomes the role of these financial institutions.
Yeah.
Uh, yeah, yeah.
Yeah, I'm sorry, Miss. The time is 5 minutes again. Thank you.
All right. So now we are just discussing the role that these institutions are playing. First is the economic growth. Financial institutions play a vital role in promoting economic growth by providing loans and investment. They help the business to expand, create jobs, and drive economic development. Next is the stability. Financial institutions contribute to the stability of the financial system of the country. They manages the risk, provide liquidity, and ensure that funds are available for the protective investment, which helps maintaining confidence in the financial markets. Then comes accessibility. Financial institutions make it easier for individual and the business to access financial services. They offer a wide range of products and services from saving account and loans to the insurance and the investment opportunity, right? So financial institutions are also helping in the risk management by meeting the financial risk through its insurance company. It provides protection against risks such as accidents, health issues, property damages, right? They are also providing the function of financial advisory. Many financial institutions offer financial advisory services to help the clients make informed decision about their finances. This can include investment advice, retirement plans, tax planning, right? So this is the functions or important role that these financial institutions are playing in an economy. So now I would like to conclude my topic, banks and the financial institutions. Financial institution, bank is a type of a financial institutions which is essential component of our financial system, providing a wide range of services that facilitate the flow of money and support economic growth. They comes in a various forms, including commercial banks, credit union, investment banks, insurance companies, pension funds, and the brokerage firms. Understanding the types and the function of these financial institutions can help beginners appreciate their impact on the economy and how they can contribute to the financial stability and accessibility, whether through accepting deposit, providing loans, facilitating payments, investing funds, managing risk, or offering financial advices. Financial institutions play a critical role in the efficient allocation of resources and the promotion of economic development. So I hope this presentation is fruitful for you all, and you will be able to understand the meaning of financial institutions, uh, concept of this financial system of any country, right? What are the components of the financial system and how that financial system is prevailing in any country through its banking, non-banking institutions and the different players. If you have now, I would like to ask if you have any query, you can post in a message box. I would like to answer your queries.
We have two questions from student already writing the Zoom chat.
Novita, anyone has any question? I would like to answer the questions.
Yes, already read in the Zoom chat.
Okay.
From Kinan and Abdul, Miss.
At the end of this session, I just wanted to you all that you are the upcoming finance students to the economy, and I want you to contribute your knowledge into the market, be a part of these financial institutions, and help the people who need the money and invest the funds, those who have the money. You can also work as an intermediary.
Yeah, from Mr. Abdul, how are index company disrupting traditional banking model? And then from Ms. Kinan, what are the main difference between commercial bank and investment bank? Thank you. That's all. Hello, Miss. Hello?
Yes.
Yeah, the question already read in the Zoom chat.
I don't find the questions in that.
From Mr. Abdul, how are fintech company disrupting traditional banking model?
All right. What are the main difference between the commercial bank and the investment bank? See, commercial bank's basic role is to acceptance of the deposits and providing the loan and advances, right? And whereas the investment banks are the investment entities, it is facilitating the uh, investment related products to their customer, whereas commercial banks are playing the role of acceptance of deposit and providing loans and advances, and investment banks are the investment entities, help their customer to invest their money into the productive channels like mutual funds or into the other alternative stock markets like that. So this is the major difference between the commercial bank and the investment banks. Investment banking is upcoming new arena for the commerce students to be the part of investment banking, providing the proper like channelizing the finances of their customers, right?
Yeah, that's is it enough, Miss, for answer? Okay, thank you. Before I close this segment, for our participant, please open your camera. We will take a picture of the front of the page. Okay, one. Okay, thank you. Okay, finally, we come to the end of this signature today. We would like to thank you for Miss Sharma for the wonderful information and sharing your knowledge. We hope this information will be beneficial for our participants. At least we hope to for collaboration in the future with Chandigarh Group Colleges Jhanjeri, India. The visit picture for the area. We appreciate and thank you and have a nice day. Thank you.
Thank you, Novita.